Hello and welcome to the next episode of the Primis Propositions vodcast, Hear the Lion Roar. I'm Matt Brown, Head of Proposition, and as always, I'm joined by our Proposition Manager, the wonderful Nikki Hemmings. Hiya, Nikki.
Hi, Matt. Hi, everybody, and welcome to another episode of Hear the Lion Roar.
Welcome indeed. So today, we've got a bit of a first on the vodcast today. We've got somebody who wanted to return to the vodcast and have another go. So welcome back to our first returning presenter, James Chutter, Corporate Account Manager for Leeds Building Society. Hiya, James.
Hiya. Thanks everyone for watching, and thanks very much for having me back on.
Indeed, it's great to have you, mate.
See you, James.
So, James, the market at the moment is obviously really volatile. Rates are on the increase. You know, there's a lot of negative press. And I guess we don't want the press to be really negative. We want to tell the real story. So I'm just going to open that up, not really with a question, but just ask you to talk to us about the current market at the moment.
Yeah, definitely. Well, volatile is one word. Exciting could be another. A lot of I know it's really stressful out there for a lot of customers, and then that's created a lot of questions for brokers. But then what a fantastic opportunity for us as an industry to really, I suppose, show our mettle. And I would like to take a little bit of a chance to sort of give you guys a bit of an understanding of where, I suppose, lenders and customers are. But I've got a bit of a quiz almost for you two, so you can sort of work out some of the, I suppose, the main stats that I've pulled out from the internet over the last few days. So the typical rate on a 2-year mortgage, according to Moneyfacts, over the last 2 weeks, what do you think it's gone up to?
Oh, you're putting us on the spot, James. I'll go first. I'm going to say, because you're saying the last 2 weeks, about 5%.
Nikki, any thoughts?
Slight increase on that. I want to go 5.5.
Yeah, so according to Moneyfacts, over the last 2 weeks, it's been 6.16%. So it's jumped up dramatically in the last, as we both all know, since the government's mini budget. Then any ideas on what it could be for a 5-year deal, what the average would be?
Probably quite in line with what you're saying. I'll go bang on 6, James.
6, yeah. Any?
I can't say the same as you, Matt, can I? So again, I'm going to have to go 6.5. Aren't I?
I was going to
around
go 6.1, 6.1, and then you're right next to it. So the average is 6.07. So you win that one, Nikki. So again, a huge increase. And then energy prices. Obviously, this major concerns for customers looking at the press in terms of the mortgage rates going up, but then energy prices. So the energy cap went up back in April. Any ideas how much it went up by in terms of a percentage?
Oh, God. Again, for me personally, I've seen how much mine's gone up. It's nearly doubled. So I'll go something really high, about 80%.
80.
Yeah,
okay.
I'd say 82, 83, definitely.
So you're both not too far away, actually. So back in April, the energy price cap moved up. So it meant that customers' energy prices went up by 54%. And then recently in October, it's gone up again. It was a smaller jump, but it's gone up by 24%. So in total, 78% the customer's average energy price has gone up by. So it means that there's been quite an affordability squeeze, both for customers and for lenders. And it means that, I'm sure we'll see a lot of lenders increase the amount of stress rates that they're putting on to make sure that customers and lenders themselves are staying in a safe position. There's also, I suppose, more of there's also the green agenda and the legalities that are coming with that, because the government have got some pretty tough targets that they've set themselves for carbon emissions. So by 2050, the UK government have set us a target, or set the UK the target of coming carbon neutral by 2050. And then as lenders, they wrote out a consultation paper a few years ago saying that lenders need to get their back books to a EPC average of C by 2030. So as lenders, we're all starting to make those movements, and we've seen the launch of green products in the last year or two. At the moment, I wouldn't say anyone's really found anything that's really going to start driving a change in not just customer behaviour but broker behaviour. So I suppose that kind of gives you a bit of a, hopefully a not too bleak picture of the current market. But I suppose it's now just how a Leeds Building Society trying to help with that. And we've now taken a new approach to affordability for energy efficient homes that are new builds. So what we've done is we've assessed ONS data, and we feel that there is a 20% saving for a customer who is buying a EPC rated B or above new build property versus someone who might be buying a EPC rated standard property that's then much lower. So I do have some props as ever to help out. Hopefully
James, I am delighted you've returned to the vodcast with props. Amazing.
You have no idea how long it took me to get the laptop to prop to face ratio sorted out, but I won't go any further into it. So here we've got our standard property, which is very much like my house at the moment, EPC rated E, and I've made the maths nice and easy. These aren't the exact figures in terms of the cost. So let's say, for example, this house is costing £500 a month in terms of the utility bills. So we've assessed that compared to a lovely new build property, which is rated EPC B or above, that rather than costing £500, it's only costing £400, which leaves £100 extra in terms of free income for our customers who are looking to buy new properties. So in our customers' situation here, where we've got Barbie and Ken who are looking to buy, they're not going to stand up for me at all, but it means that they've got an extra £100 in terms of their affordability. And I've got now this scenario, if you're okay for me to share my screen a second.
Go for it.
Cool. I'm going to get rid of those so they're not in the way. So in terms of our new build assessment, as I just said, so it means that the customer who is going to be buying a new build property is going to be able to have that extra bit of affordability due to the energy savings and therefore the cost savings that they're going to have on their utility bills. So in Ken and Barbie's situation, you've got one of them's earning 25,000, the other's earning 25. You've got one applicant with £200 commitment and the other with applicant two with £150 commitment over a 20-year term. Just make sure the slide goes on. So when it comes to trying to find this figure, at the moment, our affordability calculator isn't up to scratch. Basically, we're rebuilding it and it's going to come live in Q1 of next year. So at the moment, if you want to find this enhanced affordability figure, brokers need to go on to our Mortgage Hub system and do a dip to be able to find that figure. So it's really useful because obviously with Mortgage Hub, we're connected with 27 Tech. And therefore, with Primus and Toolbox. So any data that they key into the 27 Tech system, they can just click through Apply Now, and all that information will be transferred across into our decision in principle. So hopefully it won't be too much of a, I suppose, a time a time issue for them. Even if you do need to key it, then our Mortgage Hub system takes around sort of 10-15 minutes to be able to key a decision in principle, but it means that your customer might be able to get that extra bit of affordability. So if we look at what the situation would be, you see down here I've highlighted that it's actually going to be a non-new build property down here, which is a no. And unfortunately, if they're looking to borrow to buy this property, and I think on the original screen it showed it being, the purchase price is here at 225,000. Unfortunately, in this scenario, we're only prepared to lend them £194,906. Now, let's say that Barbie and Ken have decided not to buy the standard build property, and they're now going to look to buy the new build property. How much do you think the loan's going to go up to? With the fact that we're now going to give them that extra bit of affordability due to the energy savings and cost savings in this property. Bear in mind that we're at 194 at the moment. They needed the purchase price of 225, so a loan amount they needed of 202,500. Any ideas how much it will go up by?
I reckon you'll give them at least another £5,000, let's say.
Yeah. I'll go 6, 7. Yeah.
6, 7. Okay, fair enough.
Always have to go higher than me, Nikki.
I know, yeah. I know. I think you always underestimate them.
Fortunately, especially for this scenario where I'm presenting on the vodcast, it fits now that we've changed it to a new build property. So it's gone up for a total of 10,863.
Wow.
I had to move the Zoom thing so I could see the amount, so I couldn't remember the exact amount. So it's gone up by 10,863 just from the change of it being a standard build to a new build property. So it means that this property is now going to be affordable for the customers. So I'll stop that share now. So it's something extra for your brokers, especially for your new build firms, to keep in your back pocket if you're looking for a little bit of extra affordability. Also, if you've got customers who are, I suppose, more environmentally focused, and it's something that we're probably going to start getting a lot more questions around. It does mean that brokers actually start to have that question with their customers around, the energy efficiencies in properties, and having that, I suppose, that green mortgage focus as well, because then you can then look at some of the green mortgages that are on the market. It helps drive that conversation so that hopefully we can start to not only provide better affordability for customers, but also move to a more greener, less carbon or more carbon efficient housing industry. There you go. I hope that's been of use. Any questions?
I'll let you go first, Nikki.
Yeah, I mean, it's listening to that, it's absolutely fantastic, and obviously questions that I've got, and I know brokers will probably have, is does it matter what loan to value that the mortgage is?
No, it doesn't. So we'll do this on 95% shared ownership. It depends on the customer's circumstances. So you'll see a variance of how much extra the customer will get. Of the scenarios that we've run, we've seen about £4,000 average increase. So but then obviously you've just seen in that scenario you've got over £10,000. So it really just depends on the customer's circumstances, like with any kind of affordability calculation. But it doesn't matter what the loan to value is.
Fantastic. Is there a maximum? What's the maximum increase a customer can get?
The most we've seen is about 11,000.
Okay.
But as I say, that's just of the scenarios that we've run. You might find your brokers might find that there's more.
Yeah, you mentioned new builds, and it's if they buy a new build. So I guess why only on new build?
So that's because we've been able to take we're one of the first lenders to do this, and we're doing it across the UK. We're not specifying it in terms of any kind of postcodes or anything along those lines. And so it's just and for a new build property, between 85 and 90% of all new build properties that are being built at the moment are B or above. So it's a really simple way of us being able to take a blanket approach right the way across the UK, irrelevant of what loan to value it is, as long as that your broker is ticking that it's a new build property that's been built within the last 2 years, and that it's EPC rated B or above. So it's a way of us being able to hopefully serve as many customers as possible who are buying those new build properties.
Brilliant. I would ask you who won the game, but I know the answer and it's not favourable to me, so I'm not going to ask you that question. So let's carry on the Leeds questions. What's next in green lending for you guys?
So I think you'll start to see us adapt this further in terms of the affordability that we're offering customers. As you say, at the moment, it's only on new build, but there might be customers who have already gone out there and made the improvements to their properties to bring it up to a B or above standard. And so I suppose it would be us trying to work out how we can then help those customers. Also looking at extra borrowing. That's probably the biggest question at the moment. We're doing what we can to help customers buy new build properties, but in terms of helping those customers afford to do retrofit work, like whether it be insulation, solar panels, helping them not only provide the finance for it and to make it affordable for them, but to then help them make the right choices of what they're doing to actually make their property an EPC rate, a higher EPC rating, for it to be that the effective changes that they need, and then also offering that extra bit of affordability. I think those are the main challenges. And I think if we're able to provide cheaper finance for extra borrowing, so if they've already got an existing mortgage with Leeds Building Society, or they're remortgaging to us to capital raise for doing work to their properties, that we're doing it in a cheap way, but also then educating them to make sure that they're doing it, that they're taking the right actions, and then also that we're then then providing extra affordability due to the energy savings that they're making. So those are I suppose the three key areas that we're going to be looking at, and to try and help those customers around retrofitting.
Awesome. Sounds really good. I think not a question, but just to sort of back up something you said in there. I heard you mention 27 Tech and obviously the mortgage apply journey. So really good to hear that there's an encouragement with all this innovation that you're doing to still get brokers to adopt through 27 Tech. So for me, anything we can do to save people time, innovate the market, you're ticking 2 big boxes there. So thanks. Cool. So I think that's pretty much it. Have we got any grilling left to do of him, Nikki, or are we free to let him go?
I think we can let him go now. I think, he's brought Ken and Barbie to the table again. What more could he do?
I forgot to bring them back because there was going to be like the happy ending of obviously they got their house and they got their keys.
Amazing. And we won't be cutting that bit out of the video. Thank you, James. Really nice to see you back on the vodcast, mates. And yeah, great stuff from the Leeds. Thanks very much.
Thanks for having us.
James.
Cheers. Bye.